Good afternoon, everybody. I deliberately sat in the session yesterday, which started at this time, and I'm pleased to say that we don't have any fewer people present. So although I do know some people have left, they had planes to catch this evening, nevertheless, this is, I think, going to be a very interesting session. Unfortunately, Roopa was not able to make it in the end from the Omidyar network. I'd just like to draw your attention to the soft copy of the financial diaries research that Omidyar network has supported. They've come out with a very interesting document looking at the financial lives of women and households in 3 countries, including India. So have a look at that. I'm sorry she's not on the panel. As a social investor interested in women's financial inclusion. But on the panel, I'm very pleased to welcome a banker turned politician. And I think one of the issues that often comes up in our discussions is that actually gender is more about politics than banking. So very pleased to have you, Meera, and thank you for finding the time. We have Karen from Women's World Banking. Women's World Banking based in the US, but been doing very interesting work over the past decade or so, I would say, as activists and researchers for women's financial inclusion. Jayshree, Vyas, still a women's banker for women, leading SEWA Bank. So a very interesting perspective there. Why a women's bank? What difference does it make? And Shamika of Brookings Institution, she comes, I would say, from a researcher's background, but like all of us feisty women here, gender is a core concern for all of us. So the first thing you'll notice is that compared to all the other panels, we are a majority of women. Maybe one of the recommendations we will come out with at the end is that ideally the women's question isn't a separate question. It needs to be there when we're talking about different elements of financial services. But so be it. Here we are. And I would request the slides to start showing because I have a few questions to you. So what I'm calling a warm-up question. Would you please stand up if you do you think there is a gender gap in financial inclusion in India? Please stand up if you believe there is a gender gap. Excellent, okay. Some of you don't think there's a gender gap. Next slide, please. Second question, do you think financial service providers should take action to ensure that financial services do include women? Please stand if you believe that, if you think that. Okay, good, about half. Not all of you, so the ones not standing are the ones to address. One more question. Do you think these questions are important? Okay, good. So we have then very much an interested audience, but also some people maybe who you're not sure. I would certainly like this to be an interactive session. I know it's the tail end. I'm also well aware that we do want to hear men's views. I did try and get at least one token man. On other panels, there's at least been one woman. On our panel, I did want to get one man, but the men I wanted have gone, or some of you are actually in the audience. So we will give men an opportunity to give your views and perspective, along with women, of course, during the session. We won't just leave it till the end. Okay, so just a comment on what we're calling the session. We are not calling it financial inclusion and women's empowerment, which is the term we usually see. And the reason we're not calling that is that we feel we need to be practical, we need to get real. And the first starting point for getting real is, well, let's look at the data and what does it tell us? So often, I have to say, particularly in India, often it doesn't actually tell us much. what you see is the number of accounts. It's not disaggregated by men. We don't know how many of the accounts are owned by men, how many are in the name of women. For example, the JDY, we are told 100% of households have an account. You know, great achievement, very interesting program, but the issue is within the household, actually, who owns that account, who is using that account. Globally and within the a few countries, we have these surveys looking at individuals within the household. So they're looking to see within the household, do men, do women, do adults, do children have accounts? The most well-known one is the World Bank Findex, based on the Gallup poll. The data from there is from 2011 and also 2014, so one is due next year, I guess. The India sample, though, is relatively small, given that it does aim to cover the whole country. And I think any of us living and working in India, you know, a key element around gender is the differences between different parts of the country. So the data I'm going to pick up on is the data from FinMedia. They have data more recently, up till 2015. They have a bigger India sample of 45,000. So I just have one slide. We're not supposed to do any presentations, but I just thought as part of getting real, let's see what is the latest data. So this is the data from Financial Inclusion Insights. The red bar is the percentage men on the left who have a bank account and use a bank account, and the red bar is the percentage women who have a bank account and use a bank account. So there you can see that by 2015, so that's about a year after PMJDY, 68% of men versus 58% of women have a bank account. But looking also at the usage of the bank account, 49% of men, 35% of women. So when we talk about a gender gap, the gender gap is the difference in percentage points between what men are doing compared to the percentage of what women are doing. But look at that increase. Already, you know, the PMJDY took place in 2014. Already in 2013, 55% of men, 39% of women had a bank account. So PMJDY, yes, it's made a difference, but already, I think under different governments, there's been a move for promoting bank inclusion. Then the second set of figures are about mobile phones, given the interest in digital financial services and use of mobile phones. So this is interesting data too from Financial Inclusion Insights, and they're looking particularly at the potential for digital financial inclusion. So there you see the blue bar, how many men own a mobile phone, that is own, 75%, this was back in 2015, and 44% of women own a mobile phone. The second question, how many use a mobile phone for additional functions, even for sending messages, quite apart from internet connectivity? So it's 20% of men, 8% of women. So I think that is interesting data as the context to what we're going to talk about. The gender gaps, I would say, are around 10% to 14%, the differences between men and women, much higher on the mobile phone, but this gap is more or less on par with other countries in Asia and Africa. So this is not something unique to India. And we are also interested, financial inclusion is not just about bank accounts, it's also looking at other financial services. So again, the data from FinMedia said 18% of men, 9% of women are covered by insurance. Pension, there's no data. Next slide, please. When it comes to credit, so this is an area where we can't get the bank data as to how many loans are in the name of women, though I think there's some on MSME lending, and we know that that's a low percentage, but the RBI does ask the banks to report on the percentage of credit that goes to women, and it's around 5%, maybe a bit more, and that's actually the target that the RBI has set, so pretty low. On the other hand, in microfinance, we know that it's 100% or nearabouts is women. So it's a different gender gap in microfinance, and we'll be talking about the implications of that, the reasons for that, and what have we learnt. So now then to start on the questions. The next slide, please. So given these gender gaps, I would like to ask you, Jayshree, to comment on your experience, that what do you feel are the realities behind women's lack of access to financial services, to telephones, and what differences do you see between different categories of women or different markets of women?
Well, I'll definitely talk about that, but since I'm looking at the topic, women's financial inclusion, and looking at Get Us Real, then, it reminds me of 70s, early 70s, where it was 4 leader women who even gave an idea of word financial inclusion. I'm not talking about women, the word financial inclusion. First woman was, I think, our ex-Prime Minister Indira Gandhi ji, who nationalized all banks, all private banks, and she gave a mandate to all banks to lend to poor. So it was the idea which came up. Then, of course, there were 3 other leaders whom we know. Ilaben Bhatt, who started SEWA Bank. Then Prema Purvaji, who started in Maharashtra, also the financial institution for women. And Jayaji, who started in Tamil Nadu. So basically, this is something that I would say that women are visionary. They not only just started an organization or gave an idea, they really worked on providing financial inclusion to poor or excluded women. Do we get real now? Yep. At today, let us see where are women leaders. I still don't see much here also, but in financial, of course, microfinance sector also, we are not seeing lots of women leaders where we don't know where they are or where we are. Unfortunately, majority of them are becoming beneficiaries, but not leaders. So this is something, a concern, which I thought I should, talk about. But coming back to your question of, urban and rural women's difference, that's what you were also asking question. See, we have been working with urban women, but if you're talking about the excluded women who are in the informal sector, they are, though they're living in urban area, they have migrated from rural area, maybe from the first generation, second generation, third generation. So little bit, their thinking is little bit the same, but what we have seen is that they have lots of opportunities so far as the economic activities are concerned. So when you see in their household, they have higher amount of cash flow as compared to regular cash flow as compared to the rural women, because basically, what we have seen is that they are involved in multiple of economic activities. And second thing which we have seen is that all family members are working, and not necessarily this is a household business. They are also doing their individual business, so they have their own income, they have their own businesses. The second thing is about priority. Their priority, they being migrated from the rural area, their first priority is housing. And it's not housing, it's basically having basic facilities for them. So this is their first priority. And also they have little bit of more knowledge about schools and education, and they're a little bit more educated as compared to the rural women. Otherwise, thinking is the same. What we have seen is that, in the rural area also they have lots of aspirations, and they also need integrated financial services. They are just talking about, the credit. They're also talking about saving. They're also talking about insurance. So, I think they are almost the same. The needs are almost the same. Only there is a difference between cash flow and type of economic activities they are doing.
Meera, in your experience as a banker, and then in a bank that also turned to microfinance. Can you tell us a bit about how you viewed the gender questions as a banker?
Well, taking off, Francis, from what Jayshree said, I think her point is very well made, because in institutions, and with greatest of respect to the men in this audience, in institutions which are run by women, they are more gender sensitive de facto. I think one great example is the late Chief Minister of Tamil Nadu, Jayalalitha. And irrespective of your political leanings, I think today there was a very good report which showed the Human Development Index indicators of Tamil Nadu, by the way, including the amount of industry and the amount of employment, were actually considerably higher. So I think there's a great case for women's leadership, not just women's inclusion, across all sectors. Within ABN AMRO, when we started the microfinance program, at that time it was not part of the priority sector lending. But one of my women colleagues, one of my younger colleagues, came to me one day and she said, we should try and do in India what Grameen has done in Bangladesh. This was still the early days. And I said, all right, that sounds like a very nice idea, and what shall we do? She said, well, what you have to do is to send me to Bangladesh to learn a little bit about it. And I said, all right, off you go. And then she came back and she said, let's start the microfinance lending program. It was, as I said, very early days at the time. We were very fortunate to have a lot of support from our Dutch colleagues. And they only gave us one parameter. They said, well, make sure that you don't lose any money. And so we said, all right, let's see how it goes. We started with a small portfolio. And at its peak, ABN AMRO was then about 25% of the market. Of course, we were on lending through partner institutions. It was a great learning for us because I think, as Jayshree said, and as I think Shamika and others will share, the research is indeed that women are very good borrowers, and our NPAs were really a fraction even of our commercial NPAs, so very, very good credit quality. And then the stories which started coming through were very inspiring. So we made it possible for our staff to actually go out and be part of this process. They would go out to do assessments. They would go out to stay in the villages. I myself, if we have some time, I will share the stories of my own journey into these places. And we found that actually our principle on microfinance was indeed, we don't want to make any money, we don't want to lose any money. And we found we were doing that. But the added benefit was that it created great staff engagement. We gave all our staff a few days each year to be able to go out into the field and do assessments, work with self-help groups, etc. And our staff engagement ratios were high. We found that when we were sharing these stories with our clients, client engagement became quite high. So we found ancillary benefits. It turned out to be actually a good thing for the bank to be doing these things. We continued that when RBS took over. As you know, the whole microfinance industry went through a big crisis. At that time, we stopped lending, but we created a foundation which we call the RBS Foundation and started giving outright grants to women. It was a grant from our side, very small grants, in the range of 5,000 to 10,000 rupees, and usually not in the form of money, but in the form of some income-generating activity. So, for example, in the Sundarbans, it was 5 black Bengal goats, or 20 chicks, or 20 kilos of seedlings of fish. In Jharkhand, it was tussar silk cocoons. And we would create the linkage to help women develop that skill, create a little bit of a market linkage to sell it out. And our request to these women was that when you started making money, give it back into the village thrift so that other women could draw from it. This turned out to be a wildly successful program. And during the time I was there at the end, we had financed about 6.5 lakh women across the country through microfinance, and about 1 lakh of women through the foundation program. My learning through all of this was that there are tangible benefits to a commercial organization from doing this. We actually calculated it in terms of the return on investment, in terms of lower staff attrition, in terms of better engagement, etc. But it also creates, I think, it creates many spin-off benefits. And learning from these women, I personally, I found that I had learned a great deal in terms of how to manage my own life, how to manage my own finances. Sometimes those who have very, very little make it stretch a very, very long way. And I think there are lessons for all of us in that.
So very tangible benefits from microfinance. If I could just follow that up a bit more, did the bank see microfinance as its program for women then? And did you apply any of the lessons in mainstream banking in terms of accounts for women and maybe larger loans for women borrowers?
You know, Francis, I think it's interesting because I don't think we as an organization successfully made that transition. Of course, gender, diversity, inclusion, these are, this became very mainstream across all organizations, certainly across ours, across the world. I mean, we in ABN AMRO and then in RBS India, we had a very healthy gender ratio. About 50% of our staff were women. But we also found that women in urban India, in banks, working in a very, shall we say, comfortable environment, seem to face exactly the same challenges as women in the poorest family. These are life cycle challenges. When you have a child, when you have a sick parent, that's the time when you either drop out of your career or you drop out of your small business. And so really women everywhere across the world, and no matter where you are, have certain challenges which are related to just being the primary caregiver in your family. And I think whether it is in microfinance or whether it is in the World Bank, if you can help a woman tide over that period in whichever way that you can do it, then you help her to remain within the ecosystem. I think that is a very important part of financial inclusion. We managed to do that for our staff, but regrettably, I didn't find a lot of women borrowers, making scale, becoming commercially viable, and going further. That, I think, was the reality.
So clearly there are issues at the bank level, but in microfinance we do have nearly 100% women. So Shamika, you have done some interesting research. Tell us a bit about your research and the gender perspective on why most microcredit borrowers are women.
So let me start. First of all, I'm very heartened to see so many of you in the room in the afternoon, the last session. And we are all assuming that this is because you really do care about gender and within the financial inclusion space. Let me start out by telling you the story of Grameen Bank, which you all know, but from the gender perspective. You know, when Grameen started, only 40% of their clients were women. And over time, by around 2000, they were 95% women. Now, it was not because Muhammad Yunus or the leadership felt that there needs to be a focus in terms of, affirmative action. We need to move towards women for the sake of it. It was because over time the women were repaying more. Okay? There is ample data to show that they just made better borrowers because they repaid more. Now, why were they repaying more? Well, first, they made more conservative investment decisions, so they were less likely to fail. They didn't make a lot of money, but whatever investments they made, the returns came in. Then, women are not as mobile, in terms of labor, they stick around the house, so they're easy to catch. They're more susceptible to peer pressure. All of these things really makes repayments high. Okay, that's the data globally. Now, what this story tells us is that there is a trade-off between growth and social objectives. So, we like to believe that the double bottom line exists, but if you really scratch, and for all of you who are from the industry, you probably recognize this, that as you go deeper down market and address women clients, you want to lend to women, you are more likely to attain social objectives of eradicating poverty, lowering fertility rates, having more consumption for children. Children stay back in schools much more. Health outcomes are better. So many social objectives are attained when clients are women. But if growth is the objective, and I mean an overriding objective between the two, then women clients don't help you grow that fast. Because their businesses, for all the reasons that Jayshree laid out and then Meera laid out, the context is such that women's businesses do not grow beyond a certain level, okay? So now it is up to individual institutions to make that call, that what is that mix of growth and social objectives that you are trying to cater to. Because when you go for one, the other is a cost you have to bear. All right? So almost all the research in microfinance, and this is not just South Asia. In South Asia, of course, Bangladesh and India, for us, microfinance is overridingly a social. The social objective cannot be forgotten. It's always there. But as you move towards Latin America, it's more commercial. It's in fact become much more part of the mainstream financial sector, well regulated. But even there, the movement, you see the demarcation between institutions which are essentially social institutions that cater to women. And then there are the high growth institutions that go for IPOs and can raise capital from the market. They are the ones who increasingly cater towards men. So now that's reality of life, and I think the decision then depends on individual bankers and institutions. Thank you.
Thank you. Yeah, I think there's an interesting debate there. Maybe Karen, this is a good place to bring you in to comment on this, the growth versus women's ratio and women numbers. So if you could start with that.
Thank you. So I think it's a really interesting point to raise because at Women's World Banking, we work around the world with partners to develop the financial products and services to serve low-income women's needs at each stage of their life. And that opportunity to serve the women's market, as we start to see more and more diverse players coming into the space and seeing the market opportunity in serving the women's market, you do start to see this trade-off in ratio. So for instance, we work a great deal with commercial banks or mobile network operators, and they have a commitment in going down market and they're seeing that opportunity. But if we are looking for that 80–90% women client base that historically microfinance has had, we're not going to see it in the commercial market, yet we are going to be able to get to very large numbers. So if we're reaching 50% women clients working with a commercial bank, is that a bad thing in serving the purpose of women's financial inclusion? And I would argue that no, because if we are going to close the gender gap in financial inclusion, if we are going to build more inclusive, stronger economies, it is going to take a wider variety of players to tackle this issue. And that market opportunity is there. So it is going to continue the microfinance institutions with their focus. It's going to be the commercial banks. It's going to be mobile network operators. It's going to be fintech players. All of these types of organizations can have a stake in serving the women's market, and if they understand the needs of the women's market, they can do so successfully and frankly have a very sustainable and profitable business.
So does that lead you into making the case for targeting women? I think it would be interesting. And also to, clearly in financial inclusion, there are a mix of services we talk about. When we talk about microfinance, that's usually microcredit. But the interest now in financial inclusion is the extension of banking services to men and women. So I think probably there we have to talk in terms of, equity would mean 50-50% rather than a higher level, though we'll hear from Jayshree on why it would be 100%. Sorry, no, just. But also we're interested in the other services, the savings, insurance and pensions. So it would be great to hear from you, because I know Women's World Banking have been looking at actually what are the market opportunities for targeting women for these services.
I think the opportunity there is the very, very first step is understanding the consumer. If I said to you that there was 1 billion people out there that was a potential market opportunity for you, and it could be profitable, and you could bring in these clients, you would pay attention, and what would be one of the first things that you would do? You would go and try and understand that market. And this seems to be a step that a lot of players often miss because they think that if they're providing financial products and services, they don't necessarily need to think about something specific for women. But in our research, time and time again, going in to understand their needs, you need to say, okay, what type of product design is going to be best for her at each stage of her life? What are her needs? If she's a young adult, perhaps it's savings is the primary product that she needs. If later in life, it might be insurance to cover against an unexpected health emergency. And so understanding those needs, designing the product for those needs allows you to better serve that segment. And I think it also raises the issue of what does the woman ultimately need at all stages of her life, and that product diversification is where the market opportunity and the business case comes in. And every woman is different, every woman has different needs at each stage of her life, but looking at all that and designing for her needs is a way that each of these players that are coming into this space at a very rapid pace, particularly here in India, can make a profit from, be sustainable, and actually serve the women's market successfully.
So maybe Jayshree on that. I think the idea of having a women's bank for women, one of the issues that comes up often in microfinance is that 100% of the customers are women, but if you look at the supply side and the management, then it tends to be run by men. Given the traditional norms in India, there is a question around women more comfortable with women as staff. So it'd be good to hear your view on the role of SEWA Bank and what difference it makes to have a bank run by women for women.
See, when we're talking about financial inclusion or exclusion, majority of the excluded people are coming from informal sector. And within informal sector, more than 60% are women workers. And that was the reason why when we decided that we will start a bank, this was the reason that, and what our objective was, when we were working with these women, we found that the main objective, that, they were dependent on money lenders and they were caught in the vicious cycle of poverty. So the objective, and it was very clear that when we want to start a bank of these women, and the objective is to help them to come out of this whole vicious cycle of poverty. That means coming out of the clutches of money lenders, helping them to build their capital, helping them to build their assets, and strengthening their businesses. So ultimately, they have a better living conditions. So, but we did not have any blueprint to follow. We did not have any products which was decided. So we started with a vanilla saving product and vanilla loan product, credit product. But what we were seeing was that, because we were looking at the performance or the purpose for which women were using money. Their first objective was, how can we just get rid of our, high cost loans or debts? So that was the first product which we had started. The second thing was that they also wanted to get back. They had mortgaged their land, pledged their lands, pledged their ornaments, so they wanted to get it back. So that was the other product which we started. We also saw, and in the mechanism also what we saw was that, women were basic instinct to save, and that would help them to build their own capital. But they were not ready to come to bank. So then the mechanism, delivery mechanism, which we start, it's not new now, but we started was collecting from their doorsteps. And then, of course, appointing agents or bank sathis, we call, for collecting that. Then, slowly when we started working on the products, of course, once they have, come out of the debts and they want to expand their business, they needed working capital loans, but at the same time, they wanted to improve the method of their working, and they wanted to buy machines. So then we also created a loan for buying machines. Then we found that, of course, they have, come out of debts, they have built their savings, built their businesses, but one sickness in the family, one flood, and everything is gone. So then insurance. The reason why I'm saying this is that, it was evolving, all the products were evolving based on the needs and based on the looking at the objective, rather than designing a product and putting it to them. Even the process of designing a product was also that many of our own staff will go to women's houses, stay there for 2 days, 3 days, try to understand how they are, dealing with their money, their finances, and then designing a product. So that was basically, looking at the objective and designing products. That was one thing. The other thing which we found was that in spite of having products, they're not using those products. One of the reasons was that money is fungible, and we have given loan for, of course, buying machine, but she's using it for, sickness of a child. I mean, that was very natural. We realized that, these are the issues, and we tried to understand the financial behavior of these women. We found that, because they were living on day-to-day basis and earning on day-to-day basis, they also had, their way of thinking was also that, aaj kamaya, aaj khaya. So they were just thinking on the day-to-day basis. And because of that, they were, of course, making very impulsive financial decisions and borrowing from money lenders at whatever rate. And they were, for all types of life cycle needs, they were using only credit, and they were not using saving or insurance. So we started our financial literacy program, and in the financial literacy program, we were focusing more on some concepts like concept of fungibility of money, because this was something which was really, confusing their whole finances. And also, power of compounding, so that they can save for different purposes, saving for marriage, saving for old age. So this, the designing products based on the needs, and and that was also given based on the objective, that are we meeting with our objective? That's basically the way.
So very much an evolutionary approach to product design to meet the needs of your target customers as women. So I think we lack a balance here. We have a women's-only bank. I don't have a male banker, but if you're out there, I'd actually be very interested to know what is the response of, say, a typical bank. I don't know if Meera is a typical banker, maybe not, or maybe you were. Because I think the challenge in getting real about women's financial inclusion is that the majority of banks are not women's-only banks. That certainly is one option. We see the larger microfinance institutions now transforming into banks, small finance banks. And what we see, as Shamika mentioned and Karen also, is that the growth in itself brings different pressures. I actually was hoping Samit Ghosh would be on the panel, but I did ask him this, that from being a microfinance institution catering entirely to women, what are your plans going forward? So his reply was actually, we are going to have to learn to cater to men. So, there is a bit of a dilemma here, that certainly with growth, with the range of products, with the sustainability of a banking institution, it's going to be more 50-50, but that is what seems healthy. But in the process of catering to men, let's not also forget that women are a market, that men are a market, and there are factors to consider in that. So I wonder on that, Meera, would you like to comment on your sense of what is a good strategy to strengthen services for women?
So Francis, actually, I'd just like to share a story. As I mentioned, we had this very big microfinance program, then the foundation program. And I'd been with the bank for many years, and so I took a sabbatical and I went and stayed with many of these women. I reached out to our partner organizations and said, can you tell me women who've been successful by any criteria? They may have started a small business, they may have educated their children, they may have escaped from an abusive husband, and asked them if they will host me for one day and one night. And I started getting, invitations from across the country, and so I just took a period of leave and went. And it was really the journey of a lifetime. And the invitations kept coming, including from our non-partner organizations. And the story I want to share actually had nothing to do with RBS. So one of the states we did not work in at all was Bihar, because at the time when we'd started the program, Bihar was considered too lawless. But indeed, with political changes there and the government of Nitish Kumar, a lot of change had come. So I was invited to come into this small village in Bihar, about 2.5 hours away from Patna. And I went and I met this lady called Saraswati Devi, and her story was just quite incredible. You know, in every place, in every business, in every bank, in everything, there's always a catalyst. And sometimes the catalyst is a man, Francis, and not necessarily a woman. And so the catalyst in this case was the village agricultural officer, whose name was Mahato. And this was in the district of Nalanda, as you know, the great university of Nalanda, which is now a little bit politically controversial, but it's been there for a while and people wanted to set it up. And all the countries of Southeast Asia were getting together to fund it. And so Mahato was sitting at a small dhaba one day, and there was a group of people from Vietnam and Thailand who were sitting in the dhaba complaining bitterly about the food. So he turned around and asked them, he said, okay, what's wrong with our food and what is it you'd like to eat? And they said, well, you know, who's going to eat this dal chawal every day? And we would like to, for example, eat mushrooms. So he said, yes, you get mushrooms here. They said, no, we don't like these mushrooms. We like different mushrooms. So being an enterprising fellow, he said, all right, when you come back next time from wherever you're going, will you please bring some mushrooms with you? And so started his story. He got these white mushrooms and these oyster mushrooms. And then he said, okay, now what do I do with it? So he went to this village, he went to Saraswati Devi. And as many of you have heard about the system of rice intensification, SRI, which is sweeping through our country, he had chosen Saraswati Devi to experiment with SRI. And it had turned out to be a very successful experiment. And indeed, that is transforming the whole rural economy of Bihar as we speak. But he went to her and he said, all right, now you have this rice husk. Will you grow these mushrooms? And she said, all right. And she started. And it turned out to be successful. And they had this little market of people who were happy to buy these mushrooms. And then her neighbor, who was Manju, who was a widow, came to her and she said, Didi, will you teach me also? And so Saraswati Devi said, yes, absolutely, taught her. Manju, who had a tiny house, converted one entire room for mushrooms. And when I met her, her daughter was completing her MBA in Patna University, and her studies had been financed by the mushrooms her mother had grown for the past few years. So I was very delighted with this. As I was sitting with them, other women from the village started coming and said, Didi, aap hamare ghar mein nahi aaye hain. So I said, okay. And so I started going from house to house. And that day I have had mushroom cooked in every style. So I had mushroom pakoras, mushroom kheer, mushroom ka sabji, mushroom pulao, mushroom biryani, you name it. Everyone in the village was growing mushrooms. They were growing them at such a scale that they had just got an order to sell dried mushrooms to Japan. They were shipping mushrooms every day out into Patna, into other cities. It was quite incredible. And the lesson that I took from this is, indeed, that men are as important as women, but also that there are many, many women-run households in our country. We tend to forget that. There is mass migration taking place in rural India. Many of the men are in the cities working, and the women are running their households. And the third thing is, to go to Shamika's point and to go to Jayshree's point, yes, women may not take their business to scale, but women create an entire ecosystem of scale around themselves. One Saraswati Devi and one Manju can only grow 10, 15 kilos of mushrooms, but an entire village can produce tons of mushrooms, and that's what women are good at. And these are the things that we have to tap into if we want real financial inclusion to take place, because I believe that men do business in a slightly different way and women do business in a slightly different way. And to Jayshree's point, if we want them to be financially included, and as commercial organizations, if we want to make money, and both of those are good objectives, we have to learn to do business in a way that suits their requirements. And if we do that, it's a win-win for all.
So I think before I open it up, I'd just like to build on the earlier discussion and just ask you, Karen, to comment on the work you've been doing looking at actual best practices in product design, marketing, and delivery for women.
I thought I would tackle this from a couple different aspects. The first being the digital financial services and what we've learned in taking digital financial services products and targeting them towards women. And the great thing about digital financial services is that it does lower the cost of reaching customers. It is not necessarily a silver bullet for women and financial inclusion because, once again, many factors go into this and the design of the product needs to be right. And so I thought I would give an example from our work in Nigeria. And there we were working with a large commercial bank who was interested in going down market and saw the market traders that populate the, both the cities and the countries as potential clients. And those market traders already had a savings mechanism in place. They weren't using formal financial services, but they were using a system where collectors would come and they would take the money, and then at the end of the month, you know, or they could withdraw the money as they saw fit. And so they very much liked, when we went in to go do the research, that the bank came to them. So that was great for them, but they did, you know, lose money on the process each month. It wasn't like they were getting interest from their account. So we said, well, can we design something that brings those positive aspects that they like of bringing the bank to her, but with the security of a financial institution? And so with our partner in Nigeria, Diamond Bank, we designed a digital savings account called Beta, which in Pidgin English means good. And that account was supplemented with a field agent. And this is where the bringing the bank to her part comes in. And so that Beta friend would go to the open air markets and with their mobile phone, open accounts, manage deposits, take the deposits, manage withdrawals, and would come visit the clients on a daily basis. And that design of the product and having that Beta friend and having a human face to the bank allowed those women clients who had previously not seen banks as for them as a way to interact with the formal financial sector. And for the bank, who had never actually interacted with this client base before, being able to see the savings pattern and what reliable savers, particularly the women, were, also allowed them to say, we can offer a whole suite of products to this segment and really have a business case in serving this market. And so we're now working with Diamond to not only offer various types of savings products, but credit products as well, and looking at insurance. Now, many factors went into making this a success.
The panel, so the floor is open.
You know, Karuna, I think you've made very, very many valid points, and I think you're absolutely right. This is something which we were also discussing. India is a very big country, and almost anything that you say about it is true and also untrue. I think my own personal experience is that the finance is important, but it's not the most important part of it. That ecosystem is really the most important part. If you have the right ecosystem, you get the right results. Because after all, what is our aim of financial inclusion? We want financial empowerment. We also want social empowerment. We also want political empowerment. You want the woman to be able to have a voice. And I think Shamika will certainly say that, you know, when women have a voice, you have better outcomes for the household, you have better outcomes for the family, and my experience, you actually have better outcomes for the entire village and the entire area as well. So how do we achieve that? And I think it's a bit converse. If the financial institution goes about it the right way, like Karen is saying, if you think it through, you can bring about that change. Otherwise, you might actually compound the misery, both for the woman and for yourself.
I just wanted to add one other component to this. When we talk about the ecosystem too, I think with this rapidly changing landscape, the role of partnerships is going to become even more important, and in a market as diverse as India, regional partnerships as well. And so looking at that through that lens is that this is not going to be, my crystal ball is a little murky, but I don't see one type of institution tackling financial inclusion across the board. And so that integration with each other and those partnerships are just going to become more important, and thinking about that in terms of developing the solutions.
I have one small point to add to that. You know, the reason the society is the way it is, I mean, there are zillions of different reasons. And there is a lot of analysis, there's a lot of research, but moving ahead, I think, you know, the onus, and particularly because we're talking about financial inclusion here, the onus cannot be left to markets alone. If it is left to institutions to eradicate gender inequality and financial inclusion, it's not going to happen in our lifetime, right? That was also the point I was trying to make in the beginning. So then the issue is, well, who in the financial inclusion industry are we then looking at to say that, well, perhaps you should do something? I think donors. Because this space is still to a large extent, and when I say donors, I mean governments. I mean non-market players who are very active in the financial inclusion space, because they are constantly not just pumping in ideas, but a lot of funds. So a lot of, you know, different kinds of institutions, like smaller NGOs, perhaps, you know, several SAGs which might be sustainable but at very high costs. You know, there are very many methods and institutions of financial inclusion that are still dependent on non-market capital. And those donors, the large donors, need to wake up and make gender a priority. And when I say make it a priority, it has to be part of their annual report, it has to be everywhere, right? It has to be an active part of the strategy moving forward. Just like health was for a long time, education as a part of microfinance. Education was a very large part of microfinance, and it did wonders for certain markets like Mexico. Gender, you know, it's there, but it's not there. And I think that is where the push has to be made. I think the onus is on the donor community within that space.
Can I? Francis. Okay, I'm Smita Premchandar. I from Sampark in Bangalore, and I also teach microfinance. I just want to say 2 or 3 things. One is that nothing has caused feminism greater harm than the concept of gender. Okay? And feminism was lost when we started saying include men in everything, and somehow we dilute the fact that there is a power, power fight, for search of any other word, and the power balance is certainly not equal in the favor of women, still not. So the fight is there. I mean, and it has to be seen like that. So every time that we have tried to say mainstream women's issues, we have lost the chance to specialize and argue for women's issues. And this is a dilemma we have to deal with. The second thing is that when we look at women in microfinance, when women were recipients of money, fine. When they were repaying, fine. But now more and more the ownership of the MFIs is with men. The frontliners are men, the managers are men, the profit makers are men. So how about things like cooperatives? How about things like SHG federations? 10 years ago, we were telling the NABARD, please promote aggregation of SHGs because we lose out. If you don't federate women now, we lose out. 10 years down the line, unfortunately, that's the truth. We don't have aggregations of women's institutions, we've lost out. One more thing I want to say in social, you talked about social. We did a research for GIZ, and the research was about whether economic empowerment of women through microfinance reduces violence against women. The finding was it's not actually women getting money in their hands that reduces violence against them, but the fact that women are able to open up in SHGs, talk about it, the curtain on the house is open, men know that somebody is peeping into their homes and seeing their behavior, and then they change. So women's institutions and collective voice and collective empowerment continues to be important, and I couldn't ditto more than you, Shamika, the fact that donors have to invest in women's institutions.
You know, I'm just responding to what Smita said, is that, you know, aggregation of SHGs. When Francis ji was asking that what will be your one idea which you would give, I was saying that, you know, we should have a national bank of SHGs, which is not a government bank. And it has to have a structure where, you know, this SHGs are autonomous, but at the same time they are linked with federations or at district level and at state level. So decisions are taken at, it's decentralized and decisions are taken at SHG level and maybe at district levels, but you know, their capital, they are investing capital, SHGs are becoming members, they are investing their capital in that bank and they are decision makers and it's their own capital. That's what I was suggesting.
Hello, ma'am. I'm Vikas Kumar. Just wanted to understand what can be inferred when we see microfinance growing in areas where or which are performing well in indicators which are related to women, such as maternal mortality indicators. So what should we infer from this growth?
Vikas, if I got your question right, you're saying, why are MFIs moving more towards areas where gender, so development indicators on gender are already better? Is that what you're saying? Yeah. Well, I think it goes back to the sustainability of those institutions. I mean, this is standard self-selection. You want to go to places where you can run the business. So, now, those places which have good gender ratio, indicators also tend to be more developed traditionally.
Right. So then the inequality which is already there in the areas,
it gets perpetuated.
Yeah.
Yes, absolutely. But what that is telling you is that if you go by market alone, which means if growth or profitability or sustainability is your objective, then naturally, and remember, it's a totally viable objective to have, right? There's no money machine. You have to generate funds to remain in business. If that is the objective overriding, then you will naturally go towards those market segments. But this is where, again, I come back to donors. If you have someone who can pay for it, then you need to move into markets where markets cannot themselves evolve. That's the role for not just donors, but also government.
My name is Soibi Upong from Nigeria. I just want to ask this question. that even when the women are allowed to be involved in financial inclusion, and there's this cultural and religious problems. When the women are collected money, then the husbands will remove the money from them, their businesses will not grow, they cannot do business very well, and then the children are suffering, they can't go to school. What do we do to assist the women so that they can truly really be involved in financial inclusion and business will go well? They are willing, but the husbands will always remove the money that has been given to them by the financial institutions. Please, just help me, give me a solution. Thank you.
Thank you for that question. It's a complex issue, and I think it involves a number of different players to address it. There are social norms, absolutely, that need to be tackled. And when we talk about financial inclusion, I think we do need to think about the fact that there are social norms and there are organizations that can help address some of those social norms. I would also say, though, from a financial service perspective, how they can get involved as well is that, thinking about both the financial and non-financial services that they can offer clients. And so, in that context, when you are learning about your business and learning networks and, sharing knowledge across groups, that can help with some of those empowerment issues. And so, because it is so complex, I would just simplify it to say that it requires a number of different types of players to address this issue.
Good evening. I am Aarti Kushwa from the Priya Sakhi Mahila Sangh Indoor. We are a women-based organization, and especially we have started as a federation of the self-help group, and we have been working since 15 to 16 years with the self-help groups in the urban and the rural area. So as per my experience, I have think that the women need just the place and the opportunity to work with the man or to walk with the man, but we have to create some place for change the social system or the behavior of the whole the gender level. If we create some kinds of policy or some system or the program to balance both so they can also have the place to put up their interest, put up their skill and their we can say like their activity kinds of. So I think कि मुझे नहीं लगता है कि कोई भी rural, urban, illiterate or the highly educated women cannot be do just like to the man. So my question and my suggestion is also in that way. We have to create some place within the program of the financial inclusion and the social development to balance both the things, so we can create the place also. So we have to just go with the family, not as an individual women empowerment. If we work with the family level, where the men and women both are working for the managing of the family, so they have to some kinds of change their role and share their role and responsibility equally, so we can create the 100% financial inclusion, not only the financial, also in the social inclusion and given their respective place in the society also. Thank you.
So this is one of the issues in getting real, isn't it, about women's financial inclusion, that there are many social barriers. There's the family context in which women do have to function. I think it's come out in some of the other sessions when it comes to women taking decisions. Do they take decisions? Or when an institution is interested in promoting a new product or talking about financial education, then they are learning that, in fact, we need to speak to men along with women. There are certain practical parameters that have emerged over the years. But I think, to go back to the earlier point, I think that the starting point in getting real is really to recognize that women are in very different situations. So the challenge for any institution is going to be how can we respond to that? What are the ways to do that? And there are different ways to do it. To be a women's only institution, to be a federation of SHGs, to make sure that within that sort of context, then there's scope for providing a context for building social capital and looking at the other aspects that affects women's work. On the other hand, there are many institutions which are run by men. Men also have a role to play. There was a slide which showed 15% of MFI staff are women. 85% are men, and there are reasons for that. And I know there are MFIs who have tried to increase the ratio of women on their staff, and they have actually found that when their staff are expected to travel to far-off places, to work late at night, it's not that women can't do that job, but it's because of the social, the cultural issues that make it difficult to have women. Maybe we see more women in the banking sector, in urban areas, where there is scope to, for women to manage their multiple responsibilities and not to be exposed to the sort of conditions which actually are there in financial services. So I think, what I'm trying to say is that there's a huge scope for diverse institutions and diverse approaches. There is no single way. I think there is an element of certainly looking to support women's agency, recognizing that there are challenges and costs associated with that, which some institutions are well placed to pick up, and some institutions are not. I think it's interesting, we have a women's-only bank, which is successful in SEWA Bank and a few of the Mahila cooperative banks. But I think we're also well aware of the bank that was set up as a women's bank for women. It had a lot of political push behind it. So what could not be better than another bank for women with full government support? But unfortunately, that was not so successful. We were discussing that earlier, Jayshree. I wonder if would you just like to comment on that question?
Well, I think the thing is that, just making a women's bank and putting capital in that bank, it doesn't make all the policies like the same. Or even if you have policies, but if it is not thought about it, like, just one kind of policy that, okay, if they are women, so then when you are giving loans, just give 1% subsidy to them. Or if they are putting deposit, just give 1% more interest. If this kind of policies are there, then it's not really helping women. If we have to have a women's bank, then we have to understand women, their needs, their objective also should be very clear, and also maybe target group also should be very clear, because women are at different positions, different type, and they're doing different types of businesses, and their income level is also different. So you can't have one policy for all. That's why are there not more SEWA banks? I know she was to ask me that question. See, I would say SEWA Bank is a concept that women need some financial services. The objective is to help them to come out of whatever condition they are. It's owned by women. Women are owners, users, and managers there. All decisions are made by women. Of course, there are not many other SEWA banks, but there are many SHGs. SHGs are also doing the same way. Women are owners, users, and leaders and managers. They are making their own decisions. Their objective is to help women, and they are also providing service. Of course, not providing voluntary savings. Otherwise, this is just a kind of answer I could give otherwise. But I wanted, can I say one more thing? No, it's on a lighter side. When you were saying that when there are more women employees, it's better and convenient for all women. We had last week we had other problem. See, we have other MFIs also who are lending to our members, and they are also borrowing from us. So all those women are paying very quickly to those men, and they are not paying that quickly to us. So when we asked them, why are you doing this? They said, we don't want men to sit in our houses. So I will just give that money to them. And when you come, you stay here, you drink tea with us, and it's just a lighter side.
I think it underlines the point that there is no catch-all solution, and that life is complex, particularly when it comes to social dynamics and working in very different environments. So if anyone else would like to comment, we do have some time left before, or I would then actually then pose the question to each of the panelists. Maybe start with you, Shamika, from that side. If you were given one or maybe two key recommendations, what would they be, and what is your reason for making that recommendation?
Now, obviously, the recommendations are not just to the government, it's also to the industry, right? Okay. So, I'll give one example which hopefully will be a recommendation, and the other is actually a recommendation to the government. We studied a microfinance institution, I'm not going to name it, but the one that was selling health insurance along with the loans. And the insurance covered the borrower and the spouse. Now, that is gender agnostic, right? Because borrowers can be men and women. And as it happened, this microfinance institution was lending to men and women, so it's a very nice setting. After the health insurance had been rolled out, we look at the data after 4 or 5 years. Now, first lesson, the claims to coverage ratio is very low. Now, obviously, this segment of the population is not a lot healthier than you and me. So there's no reason to believe that claims to coverage should be low for microfinance clients. That's lesson number one. Now, it's very good business, by the way, because you're selling insurance and no one is filing claims. It should be raising, IRDA should have been, a red flag for them. But the issue is, one, you need to contextualize. When we're talking about how products have to be designed for a specific segment, you cannot sell the same mainstream health insurance to this segment. That's number one. Number two, and this is where the gender aspect comes in. If you looked at the claims to coverage for men, whether they were borrowers or spouses, that was the same. So men were filing claims when they were falling sick, whether they were borrowers or spouses. But when it came to women, the story completely unraveled. The only women who were filing claims or health insurance claims were borrowers. It almost seemed like the spouses were ultra healthy, which is not possible. The spouses, whose husbands are, by the way, borrowers, but the dynamics of Indian households are such that these guys are almost never filing claims for their wives, which is telling you either they are not seeking health care at all, even when they fall sick, they're not going to hospitals, or if they are, then they're not filing claims. Now, it's not possible that if they actually incur an expense, they're not going to file claims, because the husbands are presumably smart enough to know that they can recover. It's just telling you that the health seeking itself is so skewed that, there's a strong gender component. Now, the lesson I'm trying to really draw to the industry is, we say contextualize, contextualize. You obviously can't sell the same product from the mainstream to the microfinance clientele, but also what you're selling to a borrower or to men cannot be exactly what you're selling to the women as well. So that product then perhaps needs an enhanced, some kind of literacy module that goes with it. Some kind of a sign-up where you say, if your spouse is covered, I'd like to have her come and sign. Or I can come to you and get it signed. It's really small interventions, marginal interventions, but that can really make a significant difference as far as using instruments that are already there. Okay, so that's to the industry. Second, and this is something, Francis, I've been thinking because, in terms of recommendation, the last 2 years, under the Modi government, through the government, we've had a massive, prioritization of financial inclusion. Now, while the RBI and the central governments and states in the past have talked about financial inclusion, but nothing to the scale of the PMJDY, the Jan Dhan Yojana. So they went ahead and opened crores and crores of accounts. And the whole vision of financial inclusion right now with this government is, there's the JAM Trinity, right? You have the Jan Dhan, which is linked to the Aadhaar, which is then going through the mobile, the connectivity is going to make all of this feasible. all this, the deliberations we've been having today, and again, all the past literature from the experience of microfinance and financial inclusion in India, we know that gender is a critical component to this. So you can set up the JAM trinity and actually miss out on the women becoming a part of it. So what I would like to recommend then to the government is, as a metric, and I'm glad Prime Minister Modi really likes numbers and he likes deadlines and he likes hardcore, goals in terms of numbers. Perhaps for each of these, in terms of how many Jan-Dhan accounts were for women across the states. Aadhaar enrollment, how many are for women? Mobile connectivity, how many women are really connected? And then it sort of triangulates and gives you a sense of how well are Indian women positioned today to really take advantage of this policy and this dream of financial inclusion, which, by the way, is anyway going, it's going ahead. Okay, in terms of the way it is being rolled out, that JAM triangulation is happening. But we do not talk about women being a part of it. And I personally believe that, much like environment, in the last UPA government, or actually the first one, environment affects all business decisions and it affects a lot of policies. It wasn't as sexy. Earlier it was seen more as an impediment, that, if you had to get various compliances, environment was seen as an impediment to actually getting things done. But then now, because after having incurred those initial costs, environmental concerns have become an intrinsic part of setting up businesses and ease of doing business. Just like that, I think gender has to become. When we're talking about financial inclusion, that gender lens has to be part of all major government programs. And we can start off with the JAM. Thank you.
I have already said one thing. Now I'm just telling other that, now everybody is talking about cashless and technology and digital finance and other things. But it is just assumed that people will understand it quickly. Of course, our experience is that women are responding very fast, but they do need some kind of education literacy. I'll just give one example. Day before yesterday, one woman, woman depositor came to bank and she had a balance of 400 rupees. She said that somebody called her and asked for that password. And she did not know that, she doesn't have to give, so she gave her password. He said that, the person who called, he said that I'm calling from bank, and she gave it. Now, of course, he tried to, buy something, 1,000 rupees, he could not. Again, he called, then he, I think, used it for 200 rupees. So he got that 200 rupees, and then he started calling again. He said, keep more money in your account, keep more money on your account. At that time, she was with us, and we, of course, took that number. That number was from Noida, by the way. And of course, we have this some kind of literacy, but you can't share it to everybody, and nowadays, because of this whole rush in the bank, we were not able to, everybody wanted RuPay card, everybody took RuPay card, but we have not been able to give that kind of education so far. We are giving, but it's not that much. So some kind of literacy, which is very much required. So digital literacy at a very, I think, high level, that is something, it has to be linked with that.
I think first and foremost, there needs to be a philosophy change in how we think about women's financial inclusion here. And I think it's always been so closely associated with credit, like a monoproduct approach. And so thinking about financial inclusion for women with a holistic view and an approach that involves multi-products, I think that's first and foremost. Secondly, whether you're a financial institution, whether you're a fintech player, whether you're the government, asking yourself in all of your activities, what does this mean for women? If I'm a policymaker, does this affect women more significantly? Am I addressing the barriers that she faces? From a financial institution perspective, is this product designed with women's needs in mind? Am I marketing correctly to that woman? And so constantly just having that ingrained in your business, in your DNA, and doing that is going to pay off, and it will have benefits for both your client base and for your organization.
You know, Francis, I would say, picking up off on Shamika's point, we as a nation are at an inflection point. The JAM Trinity creates a tremendous opportunity, both for market players, also for social change. Like the lady there said, what is it that we can do, not just to financially empower women, but also to socially empower them? The plan of the government is to make direct benefits transfers directly into Jan Dhan accounts. I believe that we should really push very hard that the benefits transfers into households should take place into the woman's account. Of course, there are many questions, and we discussed that. How will we find out who is the woman head of the household? But I think that the issue is so important that it is really time for think tanks like Brookings or Niti Aayog to think this through and make that happen. Because if you do make it happen, the balance of power in the family will shift. And that is important. I don't mean it in a negative way, but I do mean that if the woman does have the financial autonomy over this, research has shown that you do get better outcomes. The woman tends to spend on the education of the children, on the health of the children, definitely less on alcohol, more on savings, things like that. And these are all big government objectives. If we do it now, while that change is happening, we can bring real transformation.
Thank you very much. I think that's really sums up the discussion with ideas both for financial service providers, also for the government policy. I think that it was summed up on the PowerPoint. I would just then add into that what I see is we're well past the idea of being gender blind, or we should be. Though I know some digital service providers need to think about women, but you know, if you just put something out in the market, then because of the barriers for women, then women will not get included to the extent that they can be. On the other hand, though, let us not be what I would call starry-eyed, that yes, let's bring women in and that's all we need and that will somehow work. What I would recommend, and to pick up from the panelists, is that we need to follow a pragmatic middle path, ultimately to have a gender lens, to be gender aware, and the extent to which we can think about what does this mean for women, to recognize that women are individuals within a household, what are the dynamics there, recognizing that they're different in different parts of the country. We would, I think, agree that that is how we should get real about women's financial inclusion. So with that, thank you very much to the panelists, thank you to the patient audience, and we look forward to action on this.